Tax filing status options in the U.S. Which one is right for you? Understanding your individual tax filing status in the USA is crucial for optimizing your tax return. It determines how much you owe and what refunds you can claim. Our guide will help you easily navigate IRS rules and ensure you don't miss any opportunities to maximize your refund. In this blog, you'll learn how to choose the right individual status and simplify your tax filing process. Let's make tax season less stressful and more rewarding. What are the various tax filing statuses? The main options are single, married filing jointly, married filing separately, head of household, and qualifying widower with dependent child. Your filing status is determined by your marital and family situation as of December 31st, the final day of the taxable year. It's crucial because it affects how you file your taxes and can impact your tax liability and eligibility for certain credits and deductions. 1. Married filing jointly. If you get married at any point during the year, even towards the end, you are considered legally married for that entire year. This means you will be eligible to file your taxes under the status Married Filing Jointly, MFJ. Additionally, if your spouse dies during the tax year, you can still file your taxes as a married filing jointly for that year. 2. Married filing separately. Even though you're married, you can choose to file your taxes independently. This is called Married Filing Separately, MFS. This option might be chosen if you and your spouse have been living separately for a while or if you prefer to keep your tax situations and finances separate. In some cases, filing separately might lead to a lower tax bill. 3. Single. The IRS bases your filing status solely on your legal marital status, not your relationship status. You are considered single if you are not legally married by the end of the year. This includes situations where you were married earlier in the year but later divorced, or if you are a widow or widower by year's end. 4. Head of household. A single taxpayer providing a home for certain other people. To qualify, you must be unmarried or married but separated in the last 6 months of the tax year, and a dependent must live with you for over half the year while you bear more than 50% of the costs of maintaining the household. A non-qualifying widower can also be a head of household. Dependents include dependent children, dependent parents, or dependent relatives. The cost of maintaining the household includes rent, repairs, property taxes, mortgage interest, insurance, utilities, and food consumed in the house. U.S. citizens married to non-resident aliens can potentially file as head of household if they don't classify their spouse as a U.S. resident, have another qualifying person, and meet IRS criteria. 5. Qualifying widower with dependent child. A person can use this filing status if they do not remarry for 2 years after the death of the spouse and have a qualifying dependent child who lives with them for the whole year and the taxpayer bears more than 50% of the cost of the household. A dependent child cannot be a foster child, grandchild, or a sibling. If the spouse dies, in year 1, the filing status can be as MFJ. In year 2 to 3, the filing status may be that of a qualifying widower. Who can be a qualifying dependent? For a qualifying child, they must be a U.S. citizen, aged less than 19 years or 24 years if a full-time student, or permanently disabled, and must live with the taxpayer for more than half of the year. For a qualifying relative, they can be a U.S. citizen or a citizen of Mexico or Canada, with no age limit. Their gross income must be below $4,700 for the tax year. Dependents must not be filing a joint return with the spouse. What are the tax rates and standard deductions for different individual filing statuses in the USA? For 2023, the income tax rates are as follows. For single and married filing separately, 10% on $0 to $11,000, 12% on $11,001 to $44,725, 22% on $44,726 to $95,375, 24% on $95,376 to $182,100, 32% on $182,101 to $231,250, 35% on $231,251 to $578,125, and 37% on amounts above $578,126. For married filing jointly and qualifying widower, 10% on $0 to $22,000, 12% on $22,001 to $89,450, 22% on $89,451 to $190,750, 24% on $190,751 to $364,200, 32% on $364,201 to $462,500, 35% on $462,501 to $693,750, and 37% on amounts above $693,751. For head of household, 10% on $0 to $15,700, 12% on $15,701 to $59,850, 22% on $59,851 to $93,350, 24% on $93,351 to $182,100, 32% on $182,101 to $231,250, 35% on $231,251 to $578,100, and 37% on amounts above $578,101. Standard deductions for 2023 are $13,850 for single and married filing separately, $27,700 for married filing jointly and qualifying widower, and $20,800 for head of household. Still unsure about which filing status to select on your individual tax return in the USA? Water and Shark can help you understand your filing status and its associated benefits. Understanding your filing status is important because it determines your standard deduction, tax rates, and whether you can claim certain credits and deductions. These are the 5 main filing statuses: single, married filing jointly, married filing separately, head of household, and qualifying widower with dependent child. We can help you determine which filing status applies to you based on your marital status and dependents at the end of the tax year. We can also clarify the qualifications for claiming dependents, including qualifying children and qualifying relatives. Qualifying dependents must meet certain requirements such as residency, age limitations, and income limitations. Furthermore, we can clarify which expenses qualify as supporting a dependent, such as rent, utilities, food, and medical expenses. Understanding these criteria will assist you in optimizing your tax status, whether you choose standard deductions or itemized deductions, to minimize your taxable income effectively. Please feel free to reach out to us for further assistance or to schedule a consultation.